Housing market's been on a tear since the pandemic, with people relocating and looking for bigger properties.
Buying a home is without a doubt a big investment to make. In fact, for many of us, it will probably be the largest investment of our lives. However, the outcome that shapes the decision for getting approved for the house that we really want depends on how well we prepare for the application process.
I checked my bank balance on the ATM, and I had, not to brag, $5,421 in my bank account. And this is how little I know about being an adult. I saw the bank balance on the ATM screen, and I thought to myself, with no irony, I should buy a house.
What's up, thinkers? Chris Robinson here, reminding you guys to like this video before we get started. And in this video, I would like to walk you guys through some steps you should follow in order to prepare for the best possible mortgage. So be sure to watch through the full video, take notes, and subscribe to stay in the loop of similar videos like this. Enough said, let's jump into the video. Okay, so there are many things you should think about when trying to get the best mortgage terms as possible. However, the first and most important thing you should think about is your credit. So now, let's highlight some things we should focus on to prepare our credit reports and our credit scores for the application. First and foremost, you need to know what your FICO score is. So things like Credit Karma and other sites that only provide Vantage scores will not be accurate when applying for a mortgage. And your FICO score is important because this will be one of the biggest factors towards what your APR will be. However, things like income will help determine what your loan amount may be, and down payments will help determine both your loan amount as well as your APR. Also, you want to keep in mind that lenders set different credit score thresholds when it comes to pricing your loan, so the higher your credit, the more you will save based on your APR in the long run. And not only will lenders want to know what your credit score is, but the underwriters will examine your credit reports to see how well you manage your credit. And that is because a mortgage is a big investment, so all these banks really want to know and determine your risk factor. And because I care about you guys and this YouTube is developed to help you guys out, here's a few tips in order for you to follow to have healthy credit reports before applying for a home loan. First, you need to know what's on your credit reports and analyze what's affecting it. If you have a challenged credit score, you just need to clean it up. However, if you have an okay credit score, you need to figure out ways on how you can improve it. Second, if you have any negative information being reported on your credit reports, you need to check for errors and inaccuracies and dispute all or any information being reported incorrectly. However, if you have no negative information being reported on your credit reports, you need to figure out ways on how you can improve it. And this can be anything from paying down your debt, increasing your credit limits, making your payments on time, and etc. And lastly, I suggest that you avoid applying for any new credit until you improve your credit, but instead try reaching out to a friend or family member to add you as an authorized user on one of their best cards, just so that it can help you reach your goals faster. Alright, so now that we got the most important thing out the way, which is our credit, now let's focus on some additional ways on how we can improve our odds. Next on the list, you want to focus on down payment because this will help you get approved for the house that you really want. And according to a survey by the National Associations of Realtors, on average, first-time home buyers who finance their homes tend to pay 7% of their overall loan amount as their down payment. However, the median down payment for repeat buyers who finance was 16%. On the other hand though, the majority of home buyers aim to pay at least 20% of their overall loan amount as their down payment. Secondly, you want to think about what you can afford and avoid buying a house that can put you in a bind. For example, it's recommended to calculate the maintenance costs into your mortgage payments as a savings just to keep up with the well-being of your home. You also need to consider every bill and living responsibility outside of the mortgage payments as well. Failing to do your due diligence can make you feel like you bit off more than you can chew. And lastly, if you're unable to find offers that works best for you through traditional applications, I suggest that you reach out to a mortgage broker that can find you a lender as well as a loan that can fit your needs. Alright guys, so that concludes our videos for today. If you made it this far and you haven't subscribed, what are you waiting for? You obviously found my content interesting. But if you thought this video was interesting, stay tuned for my next video explaining how you can calculate a mortgage that you can afford. That's my cue guys. I'll see you guys in the next one. Peace.